Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors, and welcome to this Wednesday edition of Benzinga's PreMarket Prep, brought to you by Thinkorswim. I'm Spencer Israel here with Joel Elconin. Dennis Dick is here, but one of the consequences of having a cottage up in the middle of nowhere in Canada is your internet occasionally goes out, so he is getting back with us in a moment. Going to run through today's show real quick. We got two guests for you at 8:15. We're going to be chatting with Michelle Krebs, senior analyst at Auto Trader. She is, of course, our go-to auto analyst. And we have the auto show coming up in about 2 weeks, so it'll be good to get with her and hear her thoughts about the GMs and the Fords of the world ahead of the big auto show here in Detroit. And then at 8:35, we're chatting with Mark Shore of Shore Capital Research. He's also an adjunct professor at DePaul University. He is a researcher, does research for exchanges, brokerages, and can talk a lot about volatility products and futures. So we're looking forward to having Mark and Michelle on the show today. Joel, how are we doing in the S&Ps?
We are trading up 5.5 points, 2266.50, right at the top of the pre-market session. Yesterday's high is also your 5-day high at 69.50, all-time high 69.50. That was also your 5-day high. Let's move back down a little bit on the support here. Three of the last four closes between 60 and 61. What do you know? Pre-market low at 61 even as well. Crude just off a fraction here, down 7 cents, climbed over 54, back under now. Gold up a buck, 11.40, and silver cannot clear that $16 level. Right now, trading down 7 cents at 15.92 even. So, Spencer, I guess it's me and you to get the show started here.
Is Dennis here? You know,
I snuck in the back.
You snuck in there. You snuck in there.
You didn't even know.
Yeah,
you didn't even know.
I
knew.
Just
I knew. On you now.
I knew you were there.
I snuck in here. So anyways, I don't know. My internet just dropped for about 2 minutes there. It's back. I'm back. Let's party.
Well, before we get started, can we talk about Star Wars a little bit? What's it, Rogue One or Rouge One? Can we talk about that for a second?
What do you want to talk about?
Well, full disclosure here, I'm not a big Star Wars fan. Okay, I think I saw one. I may have saw two. I haven't seen 3 through 10 or whatever they have. But I got a independent review of the movie yesterday from, I can't reveal my source, and they said that it was terrible. And they said
this source is terrible.
Okay, they said that they had to walk out of the movie for 15 minutes because there was so much killing going on. So unless you like killing, wait, let me finish. Unless you like killing, okay. And
there's a point here.
Okay.
This is a darker movie than the original Star Wars. A little bit darker, a little bit more violent in the way that I would say, like, it's a little more gory because they actually show a little bit of blood and stuff, and they don't typically do that in Star Wars movies. So I'll give you that point. So it's not a real, I wouldn't call it a gory movie, would you, Spencer? I would just say there's more gore than the original Star Wars.
But I would say it's called Star Wars, not Star Fun, right? War. And it's Disney. You're telling me that you don't associate Disney? You don't associate Disney with violence, Joel? Come on.
No, Goofy and, Winnie the Pooh or whatever, they're not violent. But anyways, we had to walk out for 15 minutes of it. And unless you're a total Star Wars geek, that you're not going to enjoy the movie. And I won't. And I had this person give me the ending, which they were, was very predictable. But, that's what I say. So if you like gory and killing, then go see the Star Wars movie.
All right. Thanks for that.
All right.
I liked it, so I'm going to defend it again and say it was one of the better ones. Chat, what did you think of Star Wars? And Ace, letting us know. Princess Leia, unfortunately, we did lose her yesterday. Carrie Fisher did die at the age of 60, had a heart attack Friday night, and died yesterday. So we lose Carrie Fisher. Obviously, Star Wars fans are all grieving that today. So
okay. All right. Let's move on to the markets here.
Well, okay, there's not a ton to talk about, but we always find something to talk about anyways here. So if you were looking at ratings, like you said, the analysts were sleeping here, Joel. There is literally, I think, 4 ratings changes, and like 2 of them are neutral. One of note. What was the one of note, Spencer?
Oh, we had Raymond James upgrading Bank of New York Mellon to a strong buy and raising their price target to $57. That's one. That's BK. And then the other one is we're hearing that Evercore has named Amazon their top pick for 2017. Those are the two that matter today.
Let's talk Amazon first because Amazon is up there in the pre-market. Amazon's been a little bit of a run here just from yesterday. You saw everything starting to catch life yesterday. I guess Santa Claus did come to town, at least of the first day of the Santa Claus rally. Amazon up another 2 points here. Top pick Evercore. Joel, this is for 2017. They're saying Amazon run continues.
All right. First of all, Amazon Echo. That's a scam. They will not. We have one, and you will
What?
have it.
Why
Yeah,
is there, stop. Why is Amazon Echo a scam?
because if Lisa got one from one of her patients, and if you like ask it like anything Apple related or anything, it just won't answer. It
It
won't.
doesn't like the competition.
That doesn't make it a scam. It just means it won't answer to Amazon.
Well, it's
or
advertised
Apple.
that it answers everything, right?
Exactly, and we asked it a lot of questions. I mean, it was pretty good. It was fun, but after about 45, Dana and I were like teasing it so much. Lisa unplugged it, and put it away. So, anyways, Amazon.
So kind of like the Furby I got my mom like 20 years ago.
Does anybody remember Furbies?
Wait, I want to add one thing on the Amazon Echo real fast. I saw this headline yesterday. Kind of creepy. Didn't occur to me until I read it, but I saw this headline that Amazon Echo data is being sought in a murder case. So, and apparently Amazon Echo records like everything that
Like everything, every movement that's happening.
I don't know. I don't know.
Just knows. It's real. It's really used by It's really undercover agent in every person's house. And when there's a crime now, Amazon Echo will know about it.
Well, if they say, "Oh, don't kill me," and then the person does it, there could be recordings.
Yeah,
of it, right?
yeah.
Oh, wow.
So if you're gonna do a crime, don't have an Amazon Echo in your house.
I,
Is that the
trading.
moral of the story?
Yeah, trading up above yesterday's high. That was no, haven't even taken out yesterday's high yet. So that's the first target on the outside. On the upside, 74.65, and then I see a double top right around the 780 level. So call it 781.5. Those are your two levels to keep an eye on if there's a rally in Amazon.
Let's move on to the stock of 2017, the stock that every portfolio man, or stock of 2016, I should say. The stock might be the stock of 2017. We don't know that yet, but the stock of 2016, the stock that every portfolio manager, every money manager has to own in their portfolio as of obviously the 31st here, it seems like, because Nvidia is just running. We were talking about yesterday on the show, window dressing here. Window dressing to the extreme in Nvidia now. They are running. It's up another 2 points here in the pre-market. This thing, everybody's got to own it. It just seems like everybody wants to own this right now.
Not everybody, Dennis.
Not Joel.
No. Well, first of all, going to the monthly here, I almost bought this thing. I was looking at this $40 level. This was a while ago. This is like January, February, and I'm like, hey, if this breaks out of 40, boom, I'm gonna buy it.
Get it.
And I didn't. I
You
consulted.
bought Western Digital though instead, right?
Yeah, I do. I bought and I consulted one person on this, and they said, don't buy it. So I didn't buy it. I didn't chase it, and I'm out in January and February, so I'm well positioned when this thing ever goes down. I just need guidance, and Goldman Sachs and Morgan Stanley to downgrade it on the same day. But here's
and then it'll go up another point.
here's the thing where people are long the stock, right? So this thing opens right away in the after hours, and the first offer is at 120.36. They lift it for 100 shares. Boom. They don't care. They're long. They want to bid this thing up, and then the shorts are like, killing me. But there you go, 120.36. That's the bogey on the upside. This is going for the 11th straight day of the upside. It cannot go up more than 11 days in a row.
Have
Okay.
we? Yeah, 11 days is the max. Is that what you're
It's the
saying?
absolute max. And if it,
I don't know. This is window dressing to the extreme right now here, though, and this almost feels like we talk about upside capitulation. It almost is starting to feel like that now. Like everybody's running and scrambling. This thing's gonna fall like 10 points in one day. It's just a matter of what day it does that from. Who knows? Could be 125. Could be 130. By the time this thing, the year ends here, because everybody wants to own this thing. But I don't want any part of this thing in January, because I think there's going to be some massive profit taking in this come January, and I think it's going to turn. I think you're seeing classic window dressing here right now in this one, and also Ace is talking about it, AMD. You're seeing window dressing here in AMD as well, because AMD has been one of the better stocks too of 2016. Ace pointing out that actually AMD is up sevenfold as opposed to, or it's at least sixfold. I think it started the year at $2, up at 12 here. So it's been an impressive move here for AMD as well. And it was up big yesterday too. It's up big again here in the pre-market. Classic window dressing on both of these stocks right now, AMD and NVIDIA. What we know window dressing is basically portfolio managers want to show those stocks on their end of the year books. So if they don't own them, they're buying them right now, because just imagine you're a money manager there and they look at their quarter and they say, you don't even own NVIDIA, you don't even own AMD. Well, they don't want that to happen. So that's why they're going out there. If they don't own or if they're underweight it, they're buying it right now for the end of the year. Once the end of the year is over, and once, some people, and you made the good point yesterday, Joel, about tax loss selling. If taxes are indeed going, or tax, not tax loss, this is window dressing, but on the other end, tax loss selling. But if you're looking at, booking gains here, if taxes are going down, why not wait till the first to book these gains in AMD? Why not wait till the first to book these gains in NVIDIA here? So I see a lot of potential pressure for these stocks in January. I'm not sure if they're going to get hit early. We were speculating maybe it's a crowded trade. It's obviously a crowded trade here now. It's just a matter of when the wind comes out of the sails for these two stocks.
all right, and we gotta talk about NVIDIA at least every day on.
Every 10 minutes, we'll give you the NVIDIA update. So, we're going to have a guest here in a minute. We'll give you a NVIDIA update 8:20. 8:25,
Dennis,
8:30.
I'll give you.
We'll interrupt the guest in his middle of his point. We have to do the NVIDIA update.
How about, what do I owe you, 2 steak dinners?
You want to bet money on?
I want to
okay,
go a double steak dinner. I'll give you 140. I'll give you one.
I just got to telling you that I'm looking at the stock and saying it's upside capitulation. It's overdone. The wind's going to come out of the sales, and now he's trying to make me make a bullish bet on it.
I'm sorry. Okay, let's cover.
I think it can continue for the next. I'm not shorting it here. I don't know if I'm going to short a period. Who knows? This thing is such a rocket ship. But the next couple of days, who knows? It could continue, because, like we were saying, this is classic window dressing. Maybe there's still a lot of money managers that want to buy the stock. But I don't want any part of the stock come January. And I might be planning from the short side come January, too. So we got Stock Hunter asking, when will it drop? I'm saying it drops in January. I'm just concerned it might drop a day or two before.
All right, one more stock before we bring in our auto analyst, Michelle Krebs.
I don't think we have time. We only have 15 seconds. Can you do a stock in 15 seconds?
Nope. All right.
No.
We're going to take a quick break, and we're going to bring in our first guest of the day, and that's Michelle Krebs. She's an auto analyst at Auto Trader. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we have Michelle Krebs on the line. She is an analyst at Auto Trader. Happy holidays, Michelle. How you doing?
Same to you. Terrific.
Glad to have you on again here. We finally got a nice rally in some of these auto stocks here, but let's go to the important numbers. And December looks to be the biggest sales month of 2016, but falling short of last year's record results. This is according to Kelly Book here. So
Kelly Blue Book. Yeah,
Kelly
Blue Book is our sister website from Auto Trader. We're all part of the Cox Automotive family. Yes, their forecast has December being the biggest month of 2016, but at 1.6 million vehicles, we're estimating that the seasonally adjusted rate would be at 17.4 million vehicles. But still, last December was ridiculously awesome, so we expect this December might be down 2%. But still very, very high sales.
All right, but are they having to go with steep discounts in order to get these cars?
Well, that's the thing. To sell that many vehicles, we're seeing a lot more effort and a lot more incentives put on it. And I think, we have said all along, 2016 will be neck and neck with 2015 for the sales record. And, depending on how many incentives they pile on this last week, which is one of the biggest weeks of the year for sales and deals for consumers, if they really lure people in, maybe they'll make the record. But yes, incentives have been climbing all year long. And in some areas, they just aren't working that well. So that's why we've seen General Motors, Ford, Fiat Chrysler cut back some production because inventories are still climbing despite some of the big incentives. And mostly it's on the car side, not the sport utility side.
Is it going to be, are the revenues going to match last year's? I haven't looked at the overall revenues. Are the revenues corresponding for GM and Ford to...
I don't predict revenues and stocks and that kind of thing, but it certainly will be a very good year, and a lot of the strength comes in North America. GM's had a great year in terms of revenues. Ford's had a little bit of difficulty compared with 2015, but still extremely healthy. The automakers are in much better shape than they've been in a long, long time.
I mean, I see some of these advertisements and stuff, and they're asking for like $85 a month or $105 a month, $115 a month for. I mean, and it doesn't look like you're driving a go-kart or something. I just don't see. I just don't see how these companies are making money with these leases.
Well, but think about this. What we're seeing is two very, very different markets. We're seeing the car side really suffering. We've seen the fall in small car sales, especially mid-sized car sales. So that's where you're seeing the deepest discounts. But on the other side of the ledger, you're seeing very healthy truck sales, healthy, booming sport utility sales, and those are where the big profits are. So basically, we're seeing those profits from that side support the other side, and the other thing I would say is while you see a lot of noise and the big splashy advertisements, automakers are doing a much better job of targeting incentives. They aren't just lathering them on. They're very specific in terms of where they're targeting them, right down to the specific model and specific regions of the country.
Automakers have benefited, though, from a low interest rate environment, and now that interest rates could potentially start going up a little bit, do you see this affecting, sales in 2017? Maybe a little less discretionary and I don't know if somebody's going to buy a new car, but if you have to pay a little bit more for these cars from, not having 0% financing or anything anymore, is that going to affect 2017 numbers?
Well, I would rule out that we wouldn't see 0% financing because that seems to always be on the table for the best credit.
How do they do 0% financing? I just got a question because I don't know how it works. How do they do 0% financing?
Well, they offer it through their finance companies. They offer the 0% through their finance companies, and then they subsidize that. But what we see is the interest rates themselves. If you look at the last interest rate hike, it's literally on a typical car loan, it's less than $2 a month. And those are going to increase. And even if we got to the 200 basis points higher that have been talked about, then you're talking about, the average loan would increase about $30 a month. But that will be slow, gradual. Our concern is just the stack up of you see that on your car loan, then you see it on your home equity loan, you see it on your credit card loans. We're a little concerned about whether that all stacks up. And at the same time, we're only beginning to see wages increase. That's our bigger concern, that the affordability issue of new cars. The other thing we're going to see this next year is an enormous amount of off-lease vehicles come back onto the market as used cars. So those will offer very good deals to consumers and may put some pressure on new car sales.
And any concern, gas, going up? We've had a nice rally in crude oil here. Is there any incremental effect, with higher gas prices, affecting the overall auto market? Obviously, you don't have your 450 gallon. Do you see any trends coming from perhaps higher gas prices?
Well, what we typically see is when the concern is always when gas prices unexpectedly spike and significantly. Little increases may not hurt a lot. And the other thing is the fleet of vehicles that are sold as new cars now are so much more fuel efficient. So if people are turning in their 10-year-old car, they're automatically going to get a fuel economy improvement. So we don't see that as huge, but it's all these little things stacking up that we wonder if that will have an impact.
All right. I know we talk about Tesla a lot and electric cars. What's going on? I mean, is there, do you see GM and Ford maybe one of those companies stepping up the gap here? And, obviously the Volt, I'm not sure what Ford has here. You see any changes or any big advancements coming from the big two here on electric vehicles?
Well, Chevrolet Bolt is groundbreaking. It's a small electric vehicle from General Motors. It gets 238 miles on a single charge, and it costs, more in line with what a mainstream vehicle is in that $30,000 range. It's coming out ahead of Tesla's Model 3, which is in that same ballpark in terms of price and range. But still, it's a struggle to sell electric vehicles in a market that when gas prices are low and consumers are choosing sport utility vehicles over cars in general. So it'll be a tough road. I think GM has an interesting strategy because we're going to see the Chevy Bolt go into its GM Maven car and ride sharing programs, and also that's where they're focusing their efforts on autonomous. They're working with Lyft, and that's a company they bought in San Francisco to make the Chevrolet Bolt one of their first autonomous vehicles.
And along these lines, driverless cars, you see any major developments in that coming in 2017?
Well, we'll see a lot of noise. It's always hard to weed out what's just a lot of talk and what's some actions. Clearly, we're going to move closer and closer to reality of self-driving cars. Google is partnering with now called Waymo. Fiat Chrysler, they put some autonomous technology into a fleet of minivans. We'll see that at the auto show and CES. So we'll see a lot more activity on that. We're edging closer and closer to reality. Although I always caution people, it doesn't mean that everybody is going to have a self-driving car in their driveway in the next few years.
All right, Stock Hunter wants to know if you are concerned about GM idling plants. Is it just this time of year, or is that something that could continue?
I would expect in 2017 we will see GM and other automakers trim production when inventories start to bloat. I think it's a good thing that they're being disciplined rather than slathering on the incentives that do nothing but hurt residual values, that they are being much more disciplined in cutting production. We've seen that from GM for the last several months. We've seen it from Ford, recently from Fiat Chrysler. Well, I think that's what we'll see. And again, most of those cuts will be on the car side because consumer preference is on the sport utility and truck side.
And the auto show, are you coming out for the auto show in a couple weeks?
Of course,
All
I've never
right.
missed it.
All right. Well, maybe we'll get you in studio here and get you live on
We
if
could
that
do that.
fits with your schedule. Are you looking for any surprises or
Well,
any big
it's
moves?
hard to know. I think we're going to see a lot of sport utilities. We'll see a couple from General Motors, some from Ford. We're going to see the new Honda Odyssey minivan, which will take on the Chrysler Pacifica. We'll see a lot of high tech, undoubtedly. So, yes, there will be. And who knows what the surprises are? It's hard to say. But I do think a lot of the talk at the show will be about what does the new administration mean for the auto industry, and that's an open question at this point.
It sure is. Michelle Krebs, she's a Detroit-based senior analyst for Auto Trader, joining us here on Benzinga's Pre-Market Prep. Thanks a lot, Michelle. We'll talk to you again soon.
Thank you. Happy New Year.
Happy New Year to you. All right, 8:27. The video's up 2:31 at night.
The 5 minutes.
And you know what? 370,000 shares have traded.
It's
Dennis.
crazy.
Yeah.
Volume on this thing. Like, that's why it feels like it's starting to become upside capitulation. And upside capitulation isn't something a lot of people talk about. They talk about capitulation when a stock is going down. When does it capitulate? Because that's usually the bottom. Is when everybody's selling. And now everybody has to wash out the last people who have to sell it, and that's capitulation. That's the washout. That's over. Well, I sometimes talk about upside capitulation when everybody has to get in. They have to own this. I've missed the boat. I've got to get in here. And that's usually the end of the party. I think upside capitulation is occurring here. I just don't know if we're quite there yet or not, because on the calendar it says we still have 3 days left in 2016.
Yeah, the Santa Claus rally. I just want to talk real quickly here about GM, and I know this is a stock that we talked about, quite a bit earlier in the year, and kind of kicking myself for not putting this away in my portfolio because they came out. I'm looking here on the quarterly beats here. 1, 2, 3. They had 6 quarterly beats in a row. 5 of those, or all 6 of those, were for EPS. 5 of those were on revenues, and we're talking the smallest one being over 14%. And this thing just hung out. I mean, how many times did it give you a chance to buy it, 31, 32 area? And it just, goes to show you here that, the fundamentals, eventually, play out in a lot of these stocks. You got a nice pop to 37.74. Now peeling back in the 35.5 area, but the one thing that she mentioned, and since Trump wants to undo everything that Obama did, I mean, it will be interesting to see how well he wants to keep jobs here. Who knows? Maybe he'll do some things to help the auto companies, but we'll see what happens in 2017.
I did buy some more Ford. I had Ford in my portfolio, and I bought a bunch more Ford there just a couple weeks ago there, and I'm a little underwater. I bought around 12.58, I think was my price. 12.40 here today. It's a 4.84% dividend, putting it in my long-term portfolio. Short-term, I don't really like it, to be honest with you. It's got that little double bond, 12.36, 12.40. Kind of looks like it's sitting on a cliff. Has not been a great stock this year, so I don't think this is one that they're going to be running in and window dressing. Actually, for 2016, I believe it's down for the year, so has not been. They could even be some tax loss selling in Ford. So, I do see some air down to 12, but long-term, these things have some value. I don't think Tesla's going to take them all out, which is how I feel like they're being priced. Like they're being priced like they're dinosaurs, and to a certain extent they are, but they're not going to sit around. They're going to reinvent themselves, and I still, think Ford and GM have some pretty decent value here as a value investor.
All right. Violin Maker probably has the question of the year here. How do you tell the difference between a stock in a bubble that will severely pull back and those 1 in 10,000 that actually go up 1,500% in 2 years?
Oh, that is a tricky question, Violin Maker. You got the $1 million question, and you can answer that question. You won't need to listen to any shows anymore. You won't need to do any radio shows anymore because you'll be able to make all your money in the market. So you can obviously never tell with 100% certainty. I mean, it goes back to fundamental analysis too. Why is the stock rallying? You look at a stock like Dry Ships, DRYS, when it had its 1,000% rally or whatever it had, when it went from $4 to $100, and you can say, well, this is a short squeeze. This is, probably something that's not sustainable. And here we are a month later, Dry Ships gave it all back. So that one's an obvious one that it's not one of those 1 in 10,000. Now, Nvidia, it's got a good fundamental story. It's got a lot. Could it potentially go up another if 300 or 400% next year? Possibly. I mean, the stocks, they can do anything here. But when you're looking at it here and you're jumping in now, and the stock was $90 10 trading sessions ago, and now you're talking about 120. So you're basically up 30% in 10 days. That is the definition of chasing. And I've never made money chasing stocks like that before. Now, some people can do it, but I'd always be the one that's late to the party buying the top. So I like to wait for the consolidation and then wait for it to start going, as opposed to jumping on the moving train and then falling under the tracks.
I mean, I guess, technically you can look at it from, a consolidation. We talked about this yesterday, going up, getting a couple quiet days of trading, and then, break down through the bottom of the consolidation. You could tell that, technically, whatever analysis you use. I'm looking at it. This company has beat Wall Street estimates 18 quarters in a row, going back to 2012, Q2 of 2012. And here's been these revenue beats. I'm going to give you percentages: 93, 30, 46, 20, 77, 30, 33, 38, 50. I mean, the last quarter was 65. So,
Yeah.
here's an issue where if it comes out, earnings on the 15th, and the revenue surprise is only 30% higher, then you might see some kind of correction in it. But just following the fundamentals is probably going to do you a little bit better than the technicals with a stock like this.
Yeah, and it'll tell you the better story there. So there is a fundamental story here. So this is one, that has that potential to be one of the 1 in 10,000. I'm not saying it is. And a lot of times you do see these stocks, even the great ones, consolidate after big moves like this. So I would be more like, if I was looking to invest in something like this, I would want to wait for a pullback, as opposed to chasing something that's just run 30 points. I feel like there's a lot higher probability that it's going to pull back, as opposed to this thing going straight to 200.
And Yelp here. Now I'm looking on my calendar here, and I don't see Yelp earnings today. The next
No, I don't think they're Max saying that. Yeah, he was asking if Yelp's reporting earnings. I don't see that. I don't think there's anything
February
reporting
6th. Yeah. Oh, the
Yeah, I think
earnings.
Yelp's already reported.
Yeah, but let's talk about Yelp. This stock has been a
Yep.
nice mover here as of late. Back over $40. This is the first close over $40 since October here. Nice run up, Dennis. You were mentioning it got a little bit of love over in Barron's, and then it, people sat on it for 3 days here, trading up in the pre-market. Not a big Yelp fan here. Pre-market high 41.52. Let's go to the dailies here. That's taken out yesterday. I mean, the only thing that's really sticking out is 43.36 to me.
Yeah, and if you're talking, window dress, this is a stock that's actually done better. It's not like an Nvidia where everybody has to own this in their portfolio, but this is a stock. We say the strong get stronger and the weak get weaker, typically in this Santa Claus rally or Santa Claus week, whatever you want to call it. Nvidia, or just talking Yelp, it started the year down at $25, got hit hard, down to 15. Everybody was throwing it out, thinking the story was over, and they were wrong, and it came back, and actually it ended up closing this year up substantially for 2016, and it's going out with some fireworks here too, as it's up another dollar in the pre-market, 41.11. There's just a ton of stocks here that fit this description where they've had pretty good years, and that's where the money is flowing to right now. I mean, Micron is another one. MU had a really strong 2016, started the year down around $12, got hit down to 10, and now it's $23, and you're seeing it trade up here in the pre-market as well. Applied Materials is another one. It's had a really strong year. It started the year down around $18 at 33. It's up again here in the pre-market. So that's where the money is flowing this week. We're talking about short-term trades, but that seems to be the trend. And Yelp fits that description too, because Yelp has had a pretty good 2016.
And just going to the Yelp earnings here, I mean, we do talk a lot about technicals here. Going back to the Yelp chart, they had that Q2 beat in August of 8 cents, 114%, and doesn't really look like anyone really bought into that. They thought maybe it couldn't continue. You had that big sell-off in October, but then they came out and they beat in Q3 as well by 167% here. That caused the gap up here, as you can see on the chart. So, once again, technicals leading to the fundamentals leading to the move in the technicals. All right, we are going to take our second and final break of the day, and we're going to switch gears, talk commodities and futures with Mark Shore of Shore Capital Research, as well as an adjunct professor at DePaul University. We'll be right back with Mark.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. We have a new guest on the line here. That's Mark Shore of Shore Capital Research, as well as an adjunct professor at DePaul University. Mark, how you doing today?
I'm doing very well. How are you?
Good. Thanks for coming on the show. So tell us a little bit about Shore Capital Research, LLC, that you started in 2008.
Yeah, so Shore Capital Research, what I do is research consulting in alternative investments, with more of a focus on managed futures, global macro. I'm here in Chicago, so obviously this is the global hub for the futures industry, so it makes sense. That's my background. I've come from the future side. I used to run a CTA within Morgan Stanley, develop those so-called black boxes, as people refer to them, the systematic trading models. And so what I do is I write research content, a lot of it for clients, who they then use it for education, awareness, to help people understand what it is they do, their products, whether it's an exchange, it's a money manager, a platform, and with alternative investments, as that's growing, that is it's becoming it's becoming a larger allocation. So it's more and more people are trying to understand what the products are about. How are
these alternative investments doing this year? The hedge funds, as a whole. I mean, the returns in the market. Isn't there kind of like when the market's hot, there's kind of a really of a trend kind of away from these alternative investments?
There tends to be, yeah. That's actually a very interesting point, because investors oftentimes like to chase returns. And so if you think that a lot of investors tend to have a lot of equities in their portfolio, when that is moving, they tend to focus more on that, look less at other parts of the portfolio. And that's actually an interesting point, because if you think about it, what happens is that investors will look at this and go, okay, well, I'm gonna throw everything into equities, and then that's great when it makes money. But then when it starts coming down, what happens? And I saw this in the late '90s. Everyone wanted to go into equities, and then all of a sudden, early 2000s, we were getting phone calls saying, "Can you come out and talk to us about diversification?" Right? No one has a crystal ball. You don't know when the markets are going to move, either upward or downward. So having that diversification actually helps.
So what specific alternative investments do you recommend, from a diversification perspective? Like what types of what type of assets?
I don't specifically make recommendations on them.
Yeah.
But what I will do.
What's some good examples of alternative investments? Some good examples.
Well, so you have, across the board, if you really look at it on a very broad scale, you have hedge funds, managed futures, forex. You've got physical infrastructure, private equity. A lot of investors will look at hedge funds. They'll look at CTAs, managed futures. Much easier liquidity than what you're going to find in private equity or obviously physical infrastructure. With managed futures, it's all exchange traded, right? So very easy liquidity to get in and out of the actual trades, as well as to get in and out of the managers, is also relatively easy.
So what are managed futures? Just describe that for our listeners, because we got a lot of retail listeners that might not know what that is.
So managed futures, if you think about it, it's simply professional money managers who are trading futures, options on futures, and also forex markets. If you think about it relative to a mutual fund, right? They're trading, it's a professional manager trading stocks and bonds. Here, they're just trading futures markets.
Now, obviously, there's going to be expenses when you're trading these things continuously. But not only that, you got to have the timing down as well. And I've read statistics before where they say 80% of managed money, active money, underperforms the market. How do you find that 20% of managers who can outperform the market?
Well, part of it is part of the performance. Now, there are also a lot of CTAs are not correlated to equities, so they tend to be more positively correlated when equities rally, tend to be more negatively correlated when equities are falling. But they have independent returns from equities. Thus, they can also help you when your portfolio is underperforming for that downside deviation, downside volatility.
Mark, also you write, for content for exchanges, and you like to write about volatility products here, and looking at SIBO Market Volatility Index here, extended period of low volatility. Talk about how you write about it and how you use sentiment here when you're writing about the VIX.
Yeah, so what I look at is both VIX, and then there's something referred to as VSTOXX, which is the European Volatility Index, which gets traded over at Eurex Exchange. Sometimes, a lot of times people don't know it by the name of VSTOXX, but they may know it by the ticker symbol V2X. And so I look at those two indices and look at both the spot and the futures. And one is that if it tends to stay at a low number for extended period of time, it has a negative correlation to its underlying market. So with VIX, it's to the S&P 500, which means S&P is probably rallying if VIX is sitting at the bottom. So the longer that stays there, it's almost like the spring that is getting compressed, and eventually there's going to be some sort of movement in there. And when you see it happen, it's also usually in the spot and the first few months that'll happen. Doesn't mean there's going to be a crash or any major move, but you could see some sort of correction comes in. And right now, it has been sitting around its lows. So you do have that as something that may be coming in somewhere in the near future. You may see some sort of correction, or maybe even just a sideways move. And the other side of that is also I look at the VSTOXX VIX spread as a sentiment indicator, and looking for when that spread gets out of whack. Either it's too high or it's too low. The average is about 4.5 volatility points with VSTOXX at a premium to VIX. And if it starts getting down to 2, 3, which actually just was about a week ago, you're probably going to see that premium kick up, and it did. It got it up to now it's around 4 or 5. And it's very rarely ever negative. When it is negative, that could also be a good opportunity to come in and buy. That could also give you an indication that something may be happening in the markets in the near future.
So when it gets up to 4 or 5, is that more of an indication for you to sell when it's getting that high?
No, that's more of the average.
Okay.
When it starts getting to around 8, 10, or somewhere into the teens, that usually means the spread's overbought. So if you are long the spread, it's probably a good time to unwind it.
So from a sentiment indicator, you're saying we're kind of right in the middle right now then?
Yeah, we are. However, the individual markets also have been sitting at low points, both the VIX and the VSTOXX. So it's almost like the quiet before the storm.
Right. But do you see a storm happening in 2017, or do you think this, incredible run that we've had in the markets continues?
It's a really good question, and I know everyone's asking that question.
Everybody wants to know it.
Yeah.
No crystal ball, but what are your overall thoughts?
So what I think you're going to see come in is that you're going to see some more volatility kick in. Now, that doesn't necessarily mean the markets are going to have any kind of major move downward, but I think you could at least see some sideways action, that these markets may be getting a little bit overbought in the short term. The spread is telling you a bit of that. The underlying VSTOXX and VIX are also telling you that.
We've been on the line with Mark Shore of Shore Capital Research, also an adjunct professor at DePaul University, sharing his wisdom on the futures and hedge fund industries. Thanks a lot, Mark. We'll talk to you again soon.
Okay, thank you very much.
846, NVIDIA is up $1.98 at 119.30. 579,962 shares have traded, all on the buy side. There's been no sellers.
No sellers, just buyers. Okay, anyways, live deal here. We've got them talking about this stock in the chat. Your mover of the day, if I'm going to my gainers, it is right at the very top. It is up 34% here now. They said something about revenues here, Spencer. What do you got from LIVE?
That was
Spencer under the bus. He wasn't ready for this one.
You threw me under the bus. That's right, but it's okay. I'm with you. They had some guidance come out this morning at around 7 a.m. They reported their fiscal year 16 revenue is $79 million, EPS $8.92. Their fiscal year 17 revenue is easily surpassing $120 million.
So I assume this is like a concert company or something like that?
Yep. This is.
Well, I've gone to about a dozen concerts this year. I don't know how many have been live ventures, but what can you say here? Blowing it away, trading at the high of the pre-market session. Let's see, 35.5 is where we're trading, LIVE. I'm looking at this thing on the monthly here, and I don't know what happened to this thing in 2014. Even my memory cannot recall here, but man, I don't know. Has this had some reverse splits?
I think it must have been some type of reverse split here or something. Anybody in the chat know what happened? You're looking at December 7th when it gapped from $2.81 up to 18. I think that's a reverse split. Yeah. So I don't think it just gapped up doing that. And also, I'm looking at the floats. It's now 16 million shares only outstanding. That looks pretty low to me. That's why it makes me think that this had a reverse split on that day.
35.80, that's your pre-market high, off $1.20 from that. So if you're looking for a potential exit point, let's see if we can exceed 35.80 on the upside.
Also in the chat, they're talking CNAT, and this stock has been a monster too, at least for the last couple of days. Big move there yesterday, consolidating a little bit here this morning. It's down 10 cents. Stock went from $4, $6 though in 2 days, and just looking back just a week ago, the stock was $2. So this one's been moving here in the last week. CNAT.
Yeah, nice move yesterday. I mean, this one's given you a couple chances. Had a little rally up to 550, then pulled back, and then just some classic days. If you were just on this thing on the open, we talk about those opening prints quite a bit. 443 was your close on Friday. 460 open, only went down 9 cents, and then turned around. Boom, straight up, big volume traded too. 6 million shares on Friday, 23 million shares yesterday. So let's see, you did get a little follow through. I'll give you your pre-market high as a level to keep an eye on. That stands at 630.
Anthera Pharmaceuticals, your loser of the day, symbols ANTH. That stock is down 62% here in the pre-market. I'm assuming this is disappointing drug news, Spencer. Is that what? I know after the bell it was halted, and then they came out with some news. What was the news that drove this thing down 62%?
Their phase 3 solution study for Sulpura missed the primary endpoint, which is all you need to know.
Yeah, all you need to know is miss or meets. Those two words mean a lot to a pharmaceutical company, especially some of these smaller ones. When they say miss, not good news if you are long, and it is down, and it's now a penny stock, 75 cents here this morning. Joel, is there any technicals to speak of
64
here at
cents.
ANTH?
Yeah, 64 cents, your pre-market low. Got a little pop off to that. Hasn't been able to clear $1, so I'm just looking at longer term here. I guess it's just depends if the shorts want to bring it in here. The stock was at $3.50 back in October. I'm not sure what their cash situation. I'm not sure if they have anything else in the pipeline here. So if you're waiting to bring in a short under $1 here, it might be a good level. No sign of a major pop in it yet.
Looking at imbalances here, they're mixed. Alibaba, a little buy imbalance this morning, catching a bid, 77,000 a buy. Alibaba had an okay candle there yesterday, ended up closing up a buck. The rally does continue. It's up 60 cents here in the pre-market. Twitter, 30,000 to sell. Stock is trading up a little bit here as well. Haven't seen the tax loss selling come into Twitter, at least in the last couple of days. It's still benefiting a little bit from the Santa Claus rally, but still get concerned. There's a few days left here, and if there's people sitting on losses, they might buck them. Bank of America, 102,000 to sell. Wells Fargo, 71,000 to sell. I will say the European banks are down a little bit here this morning. Deutsche Bank trading down 1.5% here in the pre-market. UBS is down 1%. Barclays is down 1.5%. Credit Suisse is trading down 0.75%. So a little pressure on the European financials. It's got our U.S. financials are just kind of hanging out. They're up a little bit here, trying to get some direction. Again, if you are window dressing, you might be buying banks on pullbacks, and also you might just be chasing them up a bit here too. So hard to be bearish the banks, at least for the next couple of days until we end this 2016.
Quiet consolidation here in Bank of America after its big run up. Been in basically a 40-cent range here since the 19th, from 22.33 up to 22.83, so call it a 50-cent range. Coming near a little bit up 6 cents in the pre-market. Going back to Violin Maker's question about stocks, of whether or not this is going to be a bagger, long-time bagger. And ICPT came up here, Dennis, and hanging out here. Now, here's a stock. Remember that move that it made was at 2014? I mean, You're talking in a couple days, the thing went from 50 to 497. And then, was it a liver or kidney disease? Some kind of drug or some kind of cure. I mean, I don't know what's happened on that since then. Obviously, not much.
It's giving it all back.
Yeah, it's giving it all back here. So I guess it's important to look at these companies that make these biotech companies that make the move on one drug or hope of a drug, and as opposed to like something like Nvidia, who's just knocked it out of the park with earnings. A stock like Sarepta. Look at that run. Dennis, are you thinking about getting back in this one at all?
I bought Sarepta.
Oh, you did?
I did buy it here. I just did last week. I bought it right around $30. I'm down about a point in here. But I bought it in the long-term investment portfolio, and I was saying, why? Because this is where we came from originally. I like it when they come back to the level where it came from. So it went from 30 to 62. They've got the approval. I know, it's still a one-trick pony, but this is more of a speculative. I'm still going to say I'm not putting, hardcore money into this. It's a speculative capital here, but I like it because it's come all the way back, filled, the gap that it had from the run-up when the drug got approved. And I feel like, now that it's been approved here, and I'm getting it back at the same price it was before it got approved. So that's why I bought it.
All right, and interesting stock here this morning is a GNC Holdings. Closed 4,400 stores today. Never a good sign, right? But they should have closed more stores because the stock is trading up on that news. Got up to 11.75. Spencer, we were talking about how many stores they had. Was it?
Well, a quick Google search said 7,300.
And they closed 4,400 of them.
This is a troubled business. I mean, you could buy all this stuff online. So, yeah, I'm sure you can get all your products, and this is something, GNC was very hot, obviously 2012, 2013, but everybody buys this stuff online now. So I just don't know why you need to go and have a physical GNC store here. Obviously, they sell the stuff, especially if, Amazon eventually gets physical stores too. They sell this stuff. So they sell, products, for health and everything.
I thought it was really interesting. A few months ago, there was like an article about this in, I don't know where, the Journal or something. And they had spoken with the CEO of GNC, and he was like lamenting how technology had made their business model obsolete. And one of the things he said was, 20 years ago, price was price, and no one argued with that, right? The price it costs what it costs. You go to the store, you pay what it says. But now price is negotiable, right? Because you have Amazon and you have eBay.
It's true.
It's
true.
Anything, and he it sounded like it read so sad, right? He was like, just like our business model is obsolete.
Amazon has made it negotiable in stores now. You're exactly right, because think about Best Buy. They've had to reinvent themselves to match all the Amazon pricing, because I buy it on Amazon $10 cheaper. Okay, we'll match. So, that's how, Best Buy has turned it around by just matching those prices. And it's helped the stock because Best Buy has had a hell of a year here. But you're right. Like, you could never go into a store 5 years ago and say, this $50, well, I'll give you 40 because I can find it online for $40. And you've got to do it now. If you're these retailers here that have these stores and you can buy it on Amazon 20% cheaper, you got to match those prices or you're going to lose those sales.
JDOT reported to close stores today to adjust pricing. Some items had 4 different prices on it, so not great on the inventory. We'll see what happens with that. Matt in the chat is asking about Medtronics, MDT, a stock that has fallen from grace here. But looking at it from a technical standpoint here, at least if you're buying it at this area, you have an out. Right? We made a low of the move. MDT here. What was the low of the move? And it's tested it several times. Low of the move has been 71.04. You got back down there again. 71.05. 71.13. You know what this stock kind of looks like here to me? Remember when we had Gil Morales on a couple weeks ago, and he's talking about, when institutions are backing up the truck and, loading up here. This could be here. You had a 71.03 low in February. You got a quiet consolidation here. I'd rather see it break above 72.30 on the upside here. But, fall from grace from 89.27. Now, at least trying to put a bottom in here for short term.
Support is support until it's broken. So it starts breaking under $70, that is concerning if it starts to go under that. The only thing is once you're down here for long enough, taking the other side, you can argue, okay, consolidation, it's going to hold. But once you seem like you're down here long enough and it's not bouncing, it's not rallying out of here, then when it takes it out, you catch a lot of people who are trying to call the bottom, scrambling to get out, hitting stops through 70. So this thing starts going through 70, I think it could be at 65. So I like it from the short side if it starts breaking down through 70. But if you want to buy it here, just have your out. Know where your out is.
If we had Tommy Lackey Jr. on today, he would say, look both ways on this one. It looks like it's
I think so.
Yeah, it looks like it's forming support, but once again,
that's a great point too, Joel. Just before, you're saying this is the time when you make trades, when they're consolidated, when they're paused. The train is at the station here, so it is consolidated here. It is at the station, so make a call. It starts to get up over 73, 74, $75. Maybe it's coming back. It starts to break down, then the train starts rolling the other direction here. So, but the time to strike a lot of times is when the train is at the station, or just when it just starts getting going. So, like I was saying, if you could get down and start breaking down through 70, you might have a nice short down at 65. $5.
All right, Dennis, 8:58 here, holiday trading. I know you're entertaining a lot of guests today. Any particular strategies you're going to be looking at?
It's quiet trade. Remember, liquidity is lower. The trend is your friend. Typically, right now, NVIDIA's trend has been just amazing here. AMD as well. But you're seeing classic window dressing. And you got to look for stocks. Stocks that have had a strong 2016 might be strong again here for the next couple of days as portfolio managers are scrambling to put those in their portfolio. NVIDIA and AMD fit that description perfectly. Stocks that have been weaker, you might see some tax loss selling come in. So Twitter's had a decent couple of days, but you're concerned that maybe here in the last couple of days they slam it again, just as you get the tax loss selling coming in here. So check your trend. So if you're trading a stock, even for a day trade or, for the next couple days, look at what it's done in 2016, because that might give you a little bit of a clue as to where the institutional money might be coming for the next couple of days.
All right, before we go, Larry's looking at Wynn Resorts here. The stock has had a pretty good year. It's fallen back off its highs here. Once again, a similar setup to Medtronics here. You put in a hard low under $85, and now you're just sitting on support. If it breaks that, it will turn in resistance here. But boy, oh boy, look at that, Dennis. 1, 2, 3, 4, 5, 6 lows in a row at the 88.
Within like 30 cents of each other.
Yeah.
So it sets up, starts going down below 87. I think it sees 85. So again, those are little gap trades. Those are little trades that you can. And it's not an actual gap. I shouldn't use the word gap, but these are trades and setups that you can look for. For 2 points right there. So it's going 87. I think it sees 85.
All right, so without market action here, we're at 9 o'clock. Spencer, you want to wrap things up?
Yeah, some data for you before we go. We have Redbook U.S. retail sales out. Retail sales were up 2.1% for the week ending in December 24th. That's 2.1% year over year. U.S. retail sales for the first 4 weeks are up 1.3% year over year and up 0.8% month over month. So some retail sales numbers for you as we head into the end of our show today. Looking forward to tomorrow. We've got Phil Davis on the show. Phil's Stock World. He's on annually, it seems like, on these last few weeks of the year. Always like talking to Phil. If you missed any part of our show today, including our talks with Michelle or Mark, catch the whole thing again on YouTube, iTunes, SoundCloud, or Stitcher. And don't forget about Benzinger Pro. You can get a free 2-week trial by going to pro.benzinger.com or calling us up at 313-723-2000. Again, Benzinger Pro. Get that free 2-week trial today. All right. Have a good rest of your day, everybody, and we'll be back with you on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.